Welcome to the Zions Bank Economic Update. I'm Deb Speed, and joining me is Robert Spendlove to talk about the economic outlook for 2016. Robert, why don't we start by taking a look back? What were some of the big economic themes that we saw for 2015?
Thanks, Deb. One of the biggest themes of 2015 was the big change in oil prices. For instance, from the fall of 2014 to the fall of 2015, the price of oil per barrel dropped from about $100 a barrel to around $35 a barrel, a dramatic decrease in the price of oil. Now, on the positive side, this resulted in gas prices dropping down to around $2 a gallon. So that drop in gas prices resulted in more disposable income into people's pockets, and those people are taking that money and they're spending it going out eating and drinking and going on vacation. So we're seeing a big increase in leisure and hospitality spending in the economy. However, on the negative side, it's having a huge negative impact on those extractive industries and also on the areas that rely on that oil extraction, areas like North Dakota, Wyoming, and in Utah, the Uinta Basin.
So we saw a huge drop in oil prices. What were some of the other themes that we saw?
Going on the international side, there was a big story with Greece versus China. So in the first half of the year, everyone was talking about the Greece economic crisis, trying to restructure their debt, working with the European Union, working with Germany to try to find a way to help Greece continue to operate while also being able to pay down their debt. And there was active discussion of maybe something like a Grexit, where Greece would actually leave the European Union. By the summer, they solved that problem largely, or at least were able to take care of it. And looming in the background was the big problem in China that no one saw coming. Now, I say no one saw, but we all suspected there were problems in China. And essentially what's happened is the Chinese economy has been for years growing very strongly, but it was propped up by government spending and by export activity. When that started to weaken in the summer, the Chinese government started to take very active actions to try to mitigate the problems. But the problem is what they did was they cut the value of their currency, and a dramatic cut in their currency caused world markets to have problems. It caused the Chinese stock market to crash, U.S. stock markets dropped way down, and it created a situation where there was a lot more fear and apprehension about world markets because of what China was doing.
Now, oil, Greece, China, these are all global stories. What about nationally?
So what was happening while all this stuff is happening nationally is we've got the Federal Reserve trying to find a way to normalize our interest rates. For the past decade, short-term interest rates have been around zero. And the Fed has wanted to start normalizing those rates, get them back up to normal rates, but they've really struggled because of these overreaching problems in the economy. So in the beginning of the year, GDP was very weak, and so they felt like they didn't have the ability to start raising interest rates then. As the year went further along, employment wasn't as strong as the Fed wanted it to be, and so they kept holding off. And then underlying this whole time, inflation has been below the optimal level that the Fed wants to justify raising interest rates. However, by the end of the year, employment started to strengthen, GDP started to strengthen, the unemployment rate was dropping, and the Fed decided in December that they would raise the federal funds rate for the first time in 10 years. So they raised that by 25 basis points, and they intend to continue doing so.
Well, how do you see each of these stories playing out into 2016?
So for most market watchers, they expect the Fed to continue raising interest rates into 2016. They could do it as soon as March of 2016, and we could see as many as 4 additional rate increases in the federal funds rate. That could bring short-term interest rates up to around 1 to 1.5%. But the big issue with the Fed, though, is they need to be able to have the right kind of market conditions to justify an increase in the interest rate. And so that's going to be one of their big struggles. Another one is going to be this oil price issue. Oil prices not only have been dropping, but we're seeing even more downward pressure even over the last few weeks. Oil prices have dropped to around $30 a barrel, and they're now at a 12-year low. And we're seeing even more downward pressure. There are some people even estimating that oil could drop down into the 20s, $20 a barrel going into 2016. And then the third one is kind of this China story. China is continuing to struggle to normalize their economy. They're continuing to struggle to deal with their changing economy. And once again, in 2016, China dropped their yuan, essentially forced it down, and it caused, again, market reverberations and market drops. And so that's another struggle that we're going to be dealing with into 2016.
So what's the overall economic forecast for the United States this coming year?
Well, when you look at the economy, we often look at strengths and weaknesses. So there's a number of strengths that the U.S. economy has. We have fundamental strengths. For instance, our job growth is strong. Yeah, the employment report that just recently came out for the month of December showed that the U.S. economy grew by 292,000 jobs in December. That's a really good number. Unemployment rate continues to be very low, around 5%. Wage growth came in around 2.5%. I'd like it to be a little bit stronger, but that was still a pretty good reading. And then overall, the construction spending is strong. Consumer confidence is looking good. And so GDP is still continuing to grow. So we've got kind of fundamentals that look good. There are a number of weaknesses, though. I continue to be very nervous about the China situation. I think they continue to struggle with how to recover and how their economy continues to slow down. We've also got that downward pressure on oil prices. And these international factors are going to cause issues with especially those extractive industries, export industries, and industries that have ties to the international market. However, in the Western U.S., we have a very strong economy. We have very strong population growth, very strong employment growth, among the highest employment growth in the country. Construction spending is very strong in the West as well. And kind of our weakness that I see within the Western economies, Wyoming will continue to see weakness because of their tie to the natural resources and extractive industries. And then one of the issues that we actually are running into is kind of labor shortages, because we've got such strong employment growth and such low unemployment that it is getting harder for people to find qualified employees.
Okay, in one word, what's your forecast for 2016?
So the one word that I've heard that I really like is an okay-ish 2016.
Thank you so much for your insights, Robert. We appreciate it as always.
Thanks.
Thank you for joining us for this economic update. For more economic data and analysis, please visit zionsbank.com/economy.